Hello everyone. It's Khaled. Welcome to today's daily pitch, 30th of Jan 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Well, before we go to the economic calendar, yesterday we had a huge market volatility, especially talking about gold and silver. We will dive into these, of course, later during the session, but for now, let's see what do we have as economic data for today. Looking at the economic calendar, we have some economic data for the Eurozone, starting with, first we have the CPI. Before that, for Japan, the CPI came in at 2% year over year, the Tokyo core CPI, while the forecast was at the 2.2. We had PPI for AUD traders, and then moving to the Eurozone, we have the GDP for France, we have the unemployment rate for Germany. To be honest, all this economic data currently is not holding too much weight. What's holding more weight is the Fed meeting that we had a couple of days ago. In addition to that, the headlines we are receiving related to the US government, the US president, and Fed Jerome Powell. But moving on, during the day, we have the GDP for the Eurozone, which is expected to show us some decline, showing us some decline from 1.4 to 1.2. Unemployment rate stays stable at 6.3%. And what will be more important is the PPI data for the US. The PPI data for the US is the producer price index, or in other words, the inflation from the producer side. Now, let's have a look of what's going on, do some analysis, and today we will be diving into the lower time frame. I will tell you right now why. Looking at the dollar index, a couple of days ago, the US president gave us a small headline which affected heavily the markets. They were asking him, what do you think about the US dollar when it was dropping? And he said that the US dollar looks good for him. In other words, the US president would like to have a weaker US dollar because this will support the exports and will make the cost of the debt for the US like less, cheaper. As for the US Treasury yields, we can see the Treasury yields are moving higher. Jerome Powell, well, to be honest, it was expected that we don't have any rate cut, but his speech was as well not as dovish as the market wanted. So he said that we are data dependent, we are not near our rate yet, the inflation rate, which is at 2%, and the employment in the US is slightly better than it was previous. So all these signals shows us that the Feds will keep interest rates higher for longer. And looking at the Fed Market Watch, it means that how many rate cuts the markets are expecting for 2026. In last meeting for the Feds, the dot plot, they were expecting one rate cut. Currently, the market is expecting 2 rate cuts. We believe that the next rate cut will only come after the mid of 2026, because then the new Fed chair will be elected, and most probably the new Fed chair will be more related to Trump, and we know that the US president always wants a lower interest rate because this will encourage people for spending, stocks will move higher, cost of debt will be lower, so in general the economy will boost. But on the other hand, the risk of inflation moving higher will increase as well. So these are the probabilities. The first rate cut is expected, and it's even less than 50% in June 2026, and the next one is expected in October 2026. Of course, these percentages are subject to change at any economic data or new headline. Let's move to the charts right now. Currently, I will be looking at Dxy for the moment and see what is happening. I forgot to mention here that regarding the VIX, slightly higher. We saw some geopolitical tensions, the US threatening Iran once again, as well some trade war risk. So a lot of factors are affecting the markets. But for now, let's have a look at the DXY and see what is happening. Well, the dollar index reached a very important level, and it even broke below the 96.3. It retested. Let's zoom out to the higher time frame and delete this one. It currently retested approximately the 95.2, and it is bouncing back. We will see how this will go during the day. Of course, The PPI data could give us some either push up. If it's better than expected, means the inflation is still sticky, which I believe the number will be better than expected, and that this could give a small push for the US dollar. But for now, in general, the US dollar is still very bearish. A lot of factors is affecting the US dollar. There is, of course, the Fed credibility. The US president is giving a lot of comments, and that's not new, against the Fed Chair Powell. And the markets are expecting a new Fed chairman the next half of the year, which will be supporting supporting Trump, because Trump wants lower interest rates. So in general and summary, we are bearish on dollar till now. Okay, so let's move on to gold and see what happened. Crazy movements took place. Of course, I will not be looking at the daily time frame, because in one day we spiked up $400 and then corrected $400, and currently price is still dropping. Just give me 1 second, please. Okay, so looking at the dollar index, at gold. After the FOMC and Fed Jerome Powell didn't bring anything new. He was slightly hawkish. The markets didn't take this much into consideration. The markets kept rallying and moving up. And in a couple of minutes, I believe, if we move to the, I will be moving to the 1 minute time frame. Yes. Let's zoom in a little bit. This was the market open. This was on Wednesday, 2 days ago. The market opened with a gap up, started pushing, and in a couple of minutes you can see that the price went from the 5,500 to the 5,600. The volatility was huge, and even a lot of brokers were freezing. The spread was very big, and the volatility, as I said, was scary, to be honest. After price consolidated at this level, we can see now we are speaking pure price action. Whenever we see such a huge move, you will know that some kind of profit taking or correction will take place. But the very hard thing to do is timing when this correction will take place. But looking at the price action, we can see that price, currently we are on the 5 minute chart on gold. Price rejected several times the 5,600. And whenever we were reaching here, we had a strong snapback. Then we retested, the price action started, look at the candle, started to get slower, some bullish, bearish, just like a consolidation. And yesterday during the NYSE opened, made an upper wick, started rejecting, and then we got, I believe, the factory orders yesterday. Of course, the factory orders will not hold this much weight, but it was like a trigger for the strong sell-off. Let's see, I think it was the factory orders, as I remember. Okay, it's not refreshing. Anyways, so after we started breaking below the 5,450 approximately, a very, very, very strong sell-off took place. And here we are talking that approximately $350 a drop in in less than 1 hour, I believe. If we look at the hourly candle, a very, very, very strong drop, and then a spike up, and then currently we are still breaking lower. So I will be zooming into the lower time frame. I have a couple of areas of interest that I will be marking, and I will tell you that be very careful. As I said, the market volatility is huge today and yesterday, very, very strong market volatility. An area of interest I will be marking is here. Another one is here. These are the areas where in general we are seeing price reaction. In this market conditions, it's very important that you drop your lot size and increase your stop loss, because if we go even to the 1 minute chart, let's have a look. For example, looking at the 1 minute chart, like this candle on the 1 minute is 60 pips. Any candle could be 30, 50, 60, or even 100 pips. So that's why it's very important to put a decent stop loss. You should drop your lot size so it will be like in a good ratio with the market structure we are seeing. The first area which we are currently approaching, and if we look at the 1 minute time frame, since we started our stream a couple of minutes ago, we dropped around 60 pips, so $6 I mean. So it's huge what we are seeing. Anyway, back to the price action. My first area of interest I will be looking at is here at the 5,000 and 4,990. These areas are very important to me. I would like to see whenever we are reaching this level, I would look for the price action and see in case I start to see consolidation like this. And remember, currently we are at the 5 minute time frame. We could be taking advantage of this movement. Watch out for the price action at this level, 4,500 or 4,990. As I said, here we have a gap. If we fill a gap and we reject at this level, we could see price breaking and moving higher. The reason for the huge drop. Well, currently everyone is looking at the drop, but remember that before this drop, we had a huge move up, and not only after the FOMC, like this is from the beginning of Jan. We were at 4,300 approximately. We peaked in less than 1 month at the 5,600, so $1,300 in less than 1 month. We mentioned it several times before that we were expecting gold to be bullish, but I believe no one ever, and even the huge banks, the big banks and the institutions, they are adjusting their expectations. No one was expecting to see in 1 month this huge price movement. So after this huge price movement, if you look like we are on the 1 hour time frame, we can see that we are correcting around less than 50% of the movement we are seeing right now. And also we should keep in mind that we are reaching end of month. Usually at the end of month, we see a rebalance of flow, some profit taking move, and the big institutions and traders reposition themselves. This is a very important thing to note. And one more reason, which I believe is related to this huge gold drop, if we look at the US equities. For example, looking at Nasdaq yesterday, Nasdaq peaked around 26,300, consolidated a little bit, and it had a huge drop here. Let's see how much it's percentage wise. It's like a 3% drop in one session, in less than one session. So a lot of investors, whenever they are buying stocks and you see a sharp drop on stocks, they are liquidating their position. In order to cover this position that it's being liquidated, they could be holding gold buys, selling their gold in order to cover the liquidation that took place here. That's why sometimes it's common. You will see a sharp drop on gold, sharp drop on the equities as well. It's not like an opposite correlation or inverse relation. So what we are seeing right now, it is aggressive. Yes, it is expected. Yes, but as I said, timing it is the hardest part. So back to our analysis, let's zoom in to be more realistic on the 5-minute time frame. And even if you want, you can go to the 1-minute time frame, but of course it's very important not to get lost in the 1-minute time frame, because it will be very noisy and you could be entering random trades and quickly burning your account or get liquidated due to all this volume and volatility. Regarding the lower time frame we are seeing right now, our next webinar will be covering how to trade the lower time frame on the 1 minute, 5 minute, when and where to trade it, and it is really a very beautiful time frame to trade, especially whenever you know where and at which zones. Okay, so my next trade idea, what if we broke lower? Well, to be honest, in case I see price breaking below the 4,960, and yes, it is a $40 range. In case I see price breaking below this level, I will be looking for such price movement. And my next area I will be looking at is these candle highs at the 4,000. I'm going to say 4,900 to 4,880 and look for something like this. Here, in case we rejected, watch out for these candle highs. It's not a major area, but we are seeing some kind of reaction, and it's not like a normal reaction, a 10 or 15 pips. It's like 20, 30 or $50. So that's why watch out for these candle highs. Bigger stop loss, bigger take profit. Like yesterday, I had a trade. My stop loss was around the $25. My take profit was like 75, 100, something like this. So it's pretty normal in these market situations. So to be honest, these are the two levels I will be looking for. Number one is here, 4,500. Sorry, 5,000. I'm mixing up 5,000 and here the 4,900. Other than that, if you feel nervous with all this volume and volatility, just skip trading. Next week will be a new month, a new week, and we will see how the volume and volatility will play back then. That's my trade ideas for today, especially on gold. Hopefully, I gave you like a small summary of what happened. But now, Dillon will be joining us, sharing his ideas. See what do we have with Dillon, our special guest for today. Hello, Dillon.
Morning, everyone. Hi, everyone. Can you?
Yes, we can hear you, but please, if you can lower a little bit the voice from the mic.
Is that much better?
Yes, I believe it's better.
Okay. Good morning, everyone, and welcome back. Just to pick up from where we left off the last time on our USD ZAR pair, that's the dollar against the South African rand. Now, now we're looking at the US dollar against the rand on the 4-hour chart that you can see over here. So what stands out immediately is that the market has been in a sustained downward price structure. We can see the consistent pattern of lower highs and lower lows, which is how analysts describe trading behavior. So this basically tells us what price has been doing, not what is going to happen next. Excuse me. Now, the market is not moving randomly. Instead, it's been stepping lower in phases. Now, just to look at our key resistance reference zones, the first major resistance area sits between the price of 16.45 and 16.60, as you can see where I marked that out over here. Now, this zone previously acted as a consolidation region before price moved even lower. Now, multiple reactions happened over here, as you can see in our area, which is why it remains a key structural reference point. Now, above that, we have a broader resistance zone around 1690 and 17 Rand 10 cents. Now, this area aligns with previous swing highs and an earlier breakdown point. Now, it represents where sellers previously gained strong control of the markets. These zones are historical reaction areas. Now, it's not a trading instruction, just to be clear on that there. Now, looking at our mid-structure redistribution zone. Now, the middle box of the chart, roughly around 1630 to 1645, shows a period where price paused after an earlier decline. Now, this type of sideways behavior during a trend is often called redistribution in the market. It represents a balance phase before continuation occurred. Now, price did not break higher from here. Instead, it continued lower, maintaining the broader structure of our movement. Now, looking at the current zone and support reference area. Now, price is now interacting with a lower reaction around 1590 to 16 Rand to the dollar. Now, this zone lines up with various things like a psychological round number, prior short-term structures, and a recent area of strong volatility and rejection wicks, as you can see at the bottom here. Now, we also saw price trade below recent lows around 1615 and 1620. Now, where previous demand existed, once that level gives away, volatility expanded, which is typical when market moves into a new price territory. And this is not a new price territory for us, like I mentioned before. This is an area we have been in back in 2022, if I'm not mistaken. Just to also touch on something educational for everyone who does not understand liquidity sweeps. Now, just to simplify on this here. Now, markets do not move based on buyers and sellers randomly clicking buy or sell. These are orders sitting above highs and below lows. These are often stop losses or breakout entries. So when price moves above a previous high or below a previous low and then quickly pulls back, that is often called a liquidity sweep. What happens is price reaches an area where many orders are clustered. Those orders get triggered, volatility increases, then the market may rebalance. Now, a sweep is not automatically a reversal signal. It simply shows that liquidity, meaning available orders, has been assessed. That's what we recently saw below the prior major, the prior low near 1620, around 1620, where price moved quickly and reacted.
Yes,
Now,
exactly.
just
At
to
these
just to
levels,
also
sorry to
close it off on
interrupt.
my side, if
At these levels, you will see like some sharp market reactions, if I'm correct.
yes, that is correct.
Yes.
That is correct. Now, just to close it off on my side. Now, if this kind of market structure breakdown helps you understand how professionals read the charts, then and not actually predict, but how to read them, then we're actually preparing a structured educational program through Easy Markets Academy that goes deeper into the concepts like structure, liquidity, and market phases. So more details will be shared soon, and you can keep an eye out for that. Thank you, Khaled.
Thank you so much, Dylan, for this breakdown. Is excited for the upcoming news related to the education. Very nice breakdown. Thank you guys for joining. Hopefully, you enjoyed our analysis, and we will see you soon. Trade safe. Thanks again.